Hello, good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Aisha Faridi. And for today, the market has been fairly range-bound. We have been just around that 19,400 mark, plus minus 20 points. That's been largely the range that we have held throughout the trading session. Today, a bit of a red on the screen, at least as far as the frontline index is concerned. But the story really is in the broader markets because that is where the outperformance is. For the index, what's really dragging the market today are the HDFC twins. So the HDFC twins together are pulling down Nifty by as much as 80-90 points. So if that was not the case, the market would have had another 100-point gain. It's only these two stocks that are pulling the Nifty down the 90 points. Broader markets are outperforming. It's the Midcap index which has surged to a fresh record high, and a lot of sectors are actually trading with quite a bit of green tinge. FMCG index, for instance, hit a record high level on an intraday basis. ITC is doing well. Godrej Consumer has had a good update from the Q1 numbers that are out, and Colgate too is doing quite well in the trading session. Let's pull up some of the financial names as well, because that's been the flavor of the day with respect to the kind of Q1 updates that we have got, and that report card should really come up for you on the screen. The likes of Hindustan Bank, etc., AU Small Finance Bank, RBL have reported decent set of numbers. It's Bandhan which has been weak, HDFC which was a bit mixed. So we're watching out for all of that, Aisha.
Yeah, absolutely. Just to walk you through what the details have been like for HDFC Bank, the merged entity in its first avatar has come out with the quarterly updates. The advances have seen an uptick of about 13%, but the growth is below what the estimates were for the merged entity. Deposits, an uptick of only 1% sequentially, and that's the case with the advances as well on a sequential basis. So disappointing the street, 3% crack coming in for HDFC Bank, and that's, like Anisha just mentioned, weighing heavy on the markets as well. The other one, of course, is Bandhan Bank also, because the Q1 updates have actually disappointed. You had the loan book which has shrunk sequentially, deposits were flat on a sequential basis, and advances have seen a downtick of about 5% on a sequential basis as well. Having said that, they're not just all losers in the market. Motherson Sumi, they've entered a partnership with Honda Motor, an agreement to acquire 81% stake in Yachiyo Industries, which is largely into the manufacturing of sunroofs, which as a category for this auto anchor seems to be a new territory and a very positive one, or profitable one at that. 6% higher thereabouts for Motherson Sumi as we speak right now. And Genus Power, we chatted with the management as well earlier today. They're looking to raise about 520 crore rupees via warrants, and that deal with GIC. So these are a couple of buzzers in trade as we speak right now. But looking at the trading texture, it's definitely a pause, not a fall, but just a pause, even with HDFC Bank weighing heavy on the indexes. Bajaj Finance not seeing a through to that big breakout yesterday. We're actually only flat, and that's a positive sign, right, Kunal?
Yeah, it's a positive sign. But I think as we discussed yesterday, that many of the indicators are getting into an overbought territory. So one has to start, taking in a lot of caution. And typically, what happens is, there are two different parallels of the markets. One is the index moves or the index trends, large cap names, and the other is the overall mid cap market or the tier 2 market. So even if the index remains overbought, the momentum would still continue by sheer inertia into the other space. But then once the index starts to scale down, lower on a consistent basis, that's where we see a certain knee-jerk reaction into the other spaces as well. So I think one has to start getting into a bit of a lighter position over here. You can maintain the long positions. We discussed the strategy yesterday that traders could look to trail the stop losses, whether it's on index, large cap names, on the mid cap peers, or start to look, start looking at to book profits, partial profits on every rise for the individual names. So I think that's a better strategy. Even if traders who are building onto long positions at current levels on, say, individual stocks purely based on momentum, the position weight has to be much lighter than what it was maybe a week back.
Okay, so the position is a bit lighter, but let's bring on Naresh as well. Naresh, if you just strip away the HDFC twins, the market is doing all right, right? And even within the FMCG pack, HUL is one stock that looks very strong to you. But what other than that?
So the whole FMCG pack looks interesting. We are looking at smaller names as well as some of the larger names showing good momentum. So for example, a Godrej Consumer has been in a slow and steady momentum, again trying to make a new fresh 52-week highs. Same is the case with a Dabur, which looks interesting. The short-term momentum is strong out here. Tata Consumer. So overall, FMCG as a pack looks very promising. Colgate has given a breakout today, a new 52-week high, but the best one seems to be Hindustan Unilever in the pack. And in the small cap, there is a Bajaj Consumer Care, which has given a breakout, which still looks interesting. So defensive trade which could Unilever and a small cap like Bajaj Consumer.
That's a take coming in on FMCG. We'll have Mihir Vora also join us very shortly. But before that, listen in to the big voices that came on 18 hour today. The likes of Godrej Properties, Samvardhana Motherson, Sumi, as well as GN's Power. All of these stocks are buzzing in the trading session.
Many tenders have come out. Almost every state in the country has come out with the RDSS tenders for the smart meters. Many states have already decided that there are a lot in the pipeline, which will be decided in the next 3 to 6 months. So I see a tremendous potential for the revenue to grow from the end of third quarter. So currently the order book stands at 6,500 crores. And in my last con call with the investors, I gave a guidance of around 1,200 crores for this financial year.
We expect it to be a net cash accretive transaction at that stage. I mean, net cash balance sheet that we will be acquiring at that stage as well. It is a double-digit EBITDA margin business. It is generating close to 95 odd million euros of EBITDA. We do not see this as we anticipate this to be a fairly EPS accretive transaction, whichever way you frankly cut the piece.
We believe that very, very strong partnership is being formed with the acquisition of this company. Very, very positive outlook on where we can take this and significant insourcing opportunities, which will continue to drive a higher ROS.
We are very clear in our stated strategy of being present and deepening our presence in the 4 large geographies, which is NCR, Mumbai, Bangalore, and Pune. From a pipeline point of view, if I talk about new launches as well as phase activations, which is unlaunched phases of projects that we have a very exciting pipeline of close to 28 projects / phases. We have given a guidance of 14,000 crores for FY24, and we are reasonably confident of achieving that.
Right. Okay, let's welcome on board then Mihir Vora and find out what he's making of the market right now. Mihir, hi, afternoon. Great to have you on the show today. Just wanted to get your sense on the market right now because, our chartists were indicating that the markets surely are now giving you indication that they are getting into somewhat of an overbought territory. I mean, for a market which is paced up all the way from 19,000 to 19,400 without catching a breath, I guess some consolidation should be on the cards?
Certainly, some kind of a time correction is always healthy. Especially at the pace at which we saw mid caps and small caps rally in the last couple of months, some kind of a breather should be expected.
Breather, but Mihir, what's been your reading of the Q1 updates that we've got from the entire banking system? Is it further cementing your view when it comes to banking? Are there some names which have shown a bit of a better performance versus expectation? And for HDFC, which was weaker, especially for the merged entity, what's been your takeaway?
Sure. So I can't comment on individual stocks, but in general, the banking commentary is very positive. We are not seeing any slackening of credit growth, broadly speaking. The private sector banks have been doing well in any case for quite some time. But in the last couple of quarters, we have seen even public sector banks catch up. But I think the most significant delta in the last quarter and a half has been in the NBFC space, because this is when we have seen the narrative change from a very hawkish RBI to much less hawkish and even a dovish RBI going forward, which means that the peak of the funding crunch that were being faced by the NBFCs, the competition for deposits, etc., from banks, is probably past us. And NBFCs are now beginning to also kick in as far as credit growth is concerned. And to that extent, the valuation gap that had emerged between NBFCs and banks is probably beginning to narrow, and we have seen quite a bit of catch up by the NBFCs. And we do believe that if the easy money conditions are to return, then we might see another leg in the NBFC space also. We continue to remain bullish on the financials per se, but within that, probably a little bit of tweak in favor of NBFCs.
So in favor of NBFCs versus banks, but how are you looking at the entire ancillary space, and I mean the insurance names, the brokerage and the AMCs, etc. Is that something which is also coming on your investable radar now?
Certainly, but only thing is some of these names tend to be very pro-cyclical in the sense that when we see a lot of action in the capital markets, turnover, etc., then you see a lot of volatility or positivity in the broking space, in the AMC space. To that extent, insurance that you mentioned is far more stable, I would say. So that's more of a long-term compounding story, whereas some of the other spaces like brokerages and AMC, etc., tend to be a little more pro-cyclical.
Looking at a couple of other names, and of course HDFC Bank are cracking hard. Kunal, what's your sense? How painful could it get for HDFC Bank? Today down about almost 3%. Could it fall further? And if it does, do you buy into the stock?
Yeah, I think it should be a good buy on dips candidate. In fact, we've seen this phenomena for HDFC Bank. 1725 was the previous month high, I think, or the high in the month of May for HDFC Bank. From there was some news flow which had happened for, I think, regarding MSCI for HDFC Bank. The stock got impacted. It fell by 100 rupees to 16, 20, 25 odd levels. And now in the last couple of days, the stock made a high of 1750 and it's now come back towards 1670 odd mark, which means that the 1725, 1750 mark is actually acting as a major resistance or a supply zone for HDFC Bank. And I would sense that maybe closer to 1625, 1650 could be a good support point for the stock price. So maybe another 25, 30 points correction and the stock can actually come back into a good contra territory.
Naresh, what do you think is happening in a lot of these energy names, the OMCs, etc., MRPL, Chennai Petro? Do you track any of those?
So a lot of these names had been sideways for some time, and if you look at a MRPL or say Chennai Petro, they have been a very strong trend compared to the OMC space. So we'll keep it different. But if you look at Chennai Petro, it's making almost a 5-year high. So a big spike here. But relatively, the OMCs look interesting. There's a rights issue, etc., which is planned. But technically, the structure has started changing for the positive in these names after quite a long time. So say HPCL, which was 350 last year, corrected all the way down to 200, 210 levels, and now has started making higher tops and higher bottoms. And that big resistance at 260, 270 has been taken out. So out here also structurally could slowly and steadily go towards that 350 mark. Similarly, a BPCL was 500 last year, has corrected down to 300 and now started making new higher tops and higher bottom formations. This also could slowly go towards the 420 to 450 mark. So a buy on dips as a basket, OMCs looks interesting.
Some of the other names which are seeing some very smart follow through, and look at Hero MotoCorp, for instance. This jumped up yesterday after its tie-up with Harley and the bike that they launched in the 250cc segment, wherein Eicher has a dominance as of now. We all saw what happened to Eicher yesterday. In fact, we should bring up the chart for Eicher and tell you whether it's pressured today also or not. You are seeing a bit of a respite, at least it's not falling further. In fact, if nothing, it's trying to recover from the session lows today. But Mihir, we all know, we've all analyzed as to what would it do to the market leader, that's Eicher. But Hero MotoCorp, how much would the street be excited about this tie-up with Harley and the new launch?
Sorry, I'm not commenting on individual stock. But the point is that I think in general, two-wheeler stocks have started catching up with the rest of the auto sector. I think to a great extent, it's to do with the fact that the two-wheeler within the auto space had been underperforming for quite some time. Valuations had become relatively quite attractive. The valuation gap between two-wheelers and the rest of the auto pack was really wide, maybe at a 5-year high as far as the gap is concerned. And now that we're getting some good news on the monsoon front, rains seem to be progressing okay. Probably, the rural link plays, which is the lower end of the two-wheelers, etc., seem to be catching ground.
Let's see whether that catch-up trade continues or is just the starting of that. Let's really wait and watch what happens in that entire competition heating up in the two-wheeler space. Quickly, let's take stock of some of the other buzzes as well. So apart from MRPL, we also have Aegis Logistics, which is higher by 9%. Look at that counter now flying away. Welspun Corp is up 7%. BHEL has spiked quite a bit. In fact, if I remember it right, BHEL was one of the top picks that our chartist had this morning. So 6% higher on that one. Karnataka Bank, Mastec, Schneider, Century Textile, SGV, and actually a lot of names from the broader markets which are doing quite well. In fact, we'll discuss some of them, but only after this very short break.
back with closing trades right here in ET now. Still pretty much soft and quiet. 19,400 still holding on when it comes to the futures. 19,350 for the Nifty spot as we speak right now. Some more Q1 updates coming in, and now from Suryodaya Small Finance Bank. The one stock which continues to hold a buzz, of course, is Motherson Sumi. That continues to look good. But you're also seeing traction on a Colgate, on a BHEL, on a Divi's Labs. That also is looking pretty good as we speak right now. Mihir, just wanted to get your sense in on all the, uptick and the updates that we're seeing within pharma right now. Surely seems like the tide finally has turned after a very long, quiet period of consolidation and even underperformance.
I think a lot has to do with the fact that raw material prices have toned down in the last couple of quarters. We did see a lot of pressure on raw material prices last year. So that's one relief. And I think then on a case-to-case basis also there have been some positive news in the stocks. And given the fact that post 2021, after the, of course, big rise that we saw in the COVID time, we saw 22 as an underperforming year for pharma sector. Valuation had become relatively attractive, and with the raw material trigger and some good news on stock specific items, I think the sector has come back in the limelight.
Sector has definitely come back in the limelight, and a lot of fund managers and CIO like yourself are watching out for that space as well. But FMCG, what's your view on that? Because the valuations were not very comfortable, especially for a lot of discretionary names like, the multiplexes or even QSRs. How are you looking at the entire FMCG discretionary durables vertical?
I think the QSR space and in broadly speaking the discretionary space, in the consumer side, auto is a different segment. But if you look at the other discretionary space, there is still some pressure. We're not seeing those kind of footfalls or volume growth that would be indicative of a big pickup. So to that extent, we are still cautious. Hotels, airlines, of course, we know the capacity constraints and demand continues. But especially on the food space, there is a bit of a question mark. I think on FMCG per se, similar to pharma, raw material pressures are coming off. And if the monsoon turns out good, then again, it becomes a good rural play.
Right. Okay. That's the take coming in on the prospects of FMCG right now. Well, talking about FMCG, let's just bring up what ITC is up to in trade. A solid 1.25% move is what you're seeing on the stock, 475 where it is currently at, and Colgate, of course, which is also looking good. But you know what? Bajaj was to unveil its latest bike, so let's just cut across to that event and get in some more details.
Wait, there is a but. There is a but. But before you press the button, we've got a really important message from my father, John Block.
Good afternoon. Apologies that I'm unable to be with you in person today for this truly landmark moment in the development of the Triumph brand. When we started in 1990, our ambition for Triumph was very simple: to take this well-known and loved British name to a new level, creating motorcycles that bring together that unique Triumph style with modern performance, handling and specification that make them the best bikes they can be, which is still very much our focus today. In our drive to make Triumph motorcycles even more accessible to more riders across the world, we sought to develop a range of smaller capacity motorcycles and establish a collaboration with the right partner who shared our ambition and view on the quality and standards needed to carry the Triumph badge. With Bajaj Auto, we found the perfect partner, both from their outstanding engineering and high volume manufacturing expertise, and also their attitude and commitment.
Okay, so that's the latest coming in from the Bajaj Triumph launch. A very interesting line there wherein Rajiv Bajaj says that Royal Enfield is the bank and we are all set to rob that bank, because that does seem like the case, right, Aisha? It's just Royal Enfield which is what, taking up 80-90% of the market, and as one of the other commentators was saying, there's only one way to go from there, right?
Yeah, and that's unfortunately lower considering the stiff competition now, both from Hero as well as Bajaj now entering into that segment. Just to put it into perspective for our viewers, Bajaj Auto along with Triumph has launched its Speed 400 and Scrambler 400X bike in India. It's in collaboration, of course, with Triumph. Like I said, it's just been unveiled and the pricing as well has come out, and I think it is a little in the upper end, and I think the upper most model is about over 3 lakhs.
Had launched it at 2.29 to 2.69, so it's coming right in that range. So stiff competition in that range. Of course, it's higher than Royal Enfield, which is what, 1.93 and upwards.
The base model.
Correct. So there's obviously, Royal Enfield is much lower, but nonetheless, if you're going for brands like Harley Davidson, Triumph, etc., be ready to shell out 2.3, 2.5 lakh rupees. That's the latest coming in. But with respect to the stock price, where do we go? Because Bajaj Auto is already up 4 to 5%. Naresh, what's your view on Bajaj Auto? Is it just a one-day move or there are more legs?
So the stock has been trending up sharply, and if you look at the stock, it was also ex-dividend recently. So today it's a new all-time high again. So out here, the trend is still positive. Going forward also, the momentum is strong across the auto pack. So it is Hero Moto making a multi-year high. Now you have Bajaj Auto continuing on a trend. It's only iShare which looks like a turnaround on the downside. TVS seems to be taking a reversal possibly. So out here, a buy on dips continues on Hero MotoCorp and Bajaj Auto. They both seem to be the new leaders now.
You know, that's the take right now coming in on what the charts of Bajaj Auto are indicating. Hero MotoCorp, of course, continues to sit pretty with that 4% gain now. Kunal, it's now a problem of plenty, right? I'm not talking about charts, I'm talking about the bikes.
Yeah, it's problem of plenty, but I think it's a good choice for bikers and
Consumers,
bikers.
yeah.
Absolutely.
Meher, are you a
Tempted
bike
yet
person
or no?
as well?
No, not yet.
But Meher, what about you? Are you a bike person as well?
Used to be a big bike person in college days, but the last good usage of bike was when I did a trip to Leh.
That would be something.
Was that Ari?
So, yeah.
Okay, so we have one Royal Enfield user at least. But just quickly, Meher, before we let you go, your quick take as far as the entire manufacturing vertical is concerned. Which is the sector do you think is best placed? Is it that electronics manufacturing? Is it defense? Where do you see value?
Sorry, what's the question to me?
Yes, Meher.
Okay, so manufacturing, of course, is a huge thing. And I mean, now there is so many PLIs in so many segments that it's becoming difficult to pick and choose. And now not only PLI in electronics, chemicals, textiles, etc. But government is opening up more and more segments like semiconductors. So I think a lot of action happening. Plus the thrust on indigenous manufacturing and defense. That again, will set up a lot of manufacturing capacity. And railways, for example, are also setting up or increasing their outlay by a large amount. So I think manufacturing seems to be an exciting place to be. And I do see a 3 to 5 year theme evolving here.
Meher, we'll let you go. Thanks as always for taking the time out and sharing markets with us.
Right, thank you.
Okay, let's find out what the weather gods are like. Not here in Mumbai, because here it's a downpour almost on a daily basis. What's happening across the country? Aishwarya is here with the monsoon forecast.
Well, although on the 2nd of June we saw monsoon covered the rest of the country, but heavy to very heavy rainfall or extremely heavy rainfall, which is between 64 millimeters to 204 millimeters, and upwards of that is very likely in isolated places over Konkan, Goa, Madhya Pradesh, Maharashtra, and very heavy rainfall, which is 64 to 200 at isolated places over sub-Himalayan West Bengal, Sikkim, East Uttar Pradesh, Karnataka, Tamil Nadu, Puducherry, Karaikal, Kerala, and Mahe region. Now in the northeast and central India, we'll see moderate showers or moderate rainfall throughout the day. Now let's take a look at what the scenario is with category wise and subdivision wise, where we are seeing large or excess rainfall. Now if we consider which regions are seeing large excess rainfall, 3 divisions are actually seeing large excess rainfall, 5 regions are seeing excess rainfall, and normal or moderate rainfall is seen in 10 regions. Now the deficit regions include 17 regions across the country and 1 region which is seeing an alarming level of deficiency in terms of rainfall that we've seen throughout the country up till the 4th or 5th of July. Now the region which has had the highest rainfall so far is Western Rajasthan, which has seen about 220 excess of rainfall from its long period average of 49 millimeters of rainfall. So Western Rajasthan is pretty safe at this point. The regions that should be concerned about water shortage are the ones in orange that we can see here on this map right now. And we've seen deficient rainfall of between 20% to 59% in these orange areas that you can see from their long period averages. Now shortage or deficient rainfall, where is it more alarming? In this region, in the which has been highlighted in orange, Vidarbha region is seeing a shortage of almost 56% from its long period average. Telangana as well as Kerala and the Mahe region is also seeing more than 50% of shortage from their long period average, whereas Marathwada is the region which has the most alarming amount of shortfall at 64% from its long period average, at which is of about 154 millimeters. So that's the picture looking, that is how the picture is looking like in terms of rainfall. Although this has been an El Nino year and we expect lesser rainfall, IMD has said by end of July we should be able to cover the whole country and we'll have hopefully have normal and rainfalls throughout the country by the end of July.
Too, and Maharashtra clearly seems to be making up for the deficit in the month of June. Well, it's autos and more autos. Remember, Maruti also launched its premium SUV Invicto today. So let's take it across to my colleague Sumit, who's currently in conversation with the management. In fact, you know, it is a 7 to 8 seater and it's pretty much in the range of Toyota Innova Hi-Cross. As well as Kia Carnival, which could be the close competitor for this one. Here's Sumit in conversation with the MD and CEO.
The Indian automobile market is evolving pretty fast, and this segment also, we think for the future, this segment will increase. So we have to have a presence in this segment. So this is the first step for us to get into this market, which may expand in the future strongly.
As we understand, 6,200 bookings have been received by you. You're going to source it from Toyota. Can you tell us more about it? How will you take it? Where it will be manufactured? How many units per month you'll be taking? How will you satisfy the customers who have booked around 6,200 these Invictos with you?
So as already mentioned by Mr. Shashank, already we got this more than 6,000 booking, and this is a very big number. And we are talking to Toyota how many we are able to get from them, depending on the market situation, and also depending on the production side capacity restraint also. So we will, see the market trend and we'll discuss with them.
As we understand, in 10 to 20 lakh range, you have 20% market share, but you want to be number one SUV player in India. What's the overall plan for that? When will you become number one SUV player? And what about margins there? Higher margins, obviously.
The SUV market, as I said, is expanding pretty rapidly. And we only have one, product in this SUV segment. So in order to strengthen our lineup, we added 3 new models. So now we have 4 instead of 1. And our market share in SUV segment jumped up to the over 20% right now. And we are sure that we will expand furthermore with those new 4 products in SUV segment, and we'll become number one. That is it's a matter of time that we will reach this number one position in this segment.
And Talking about Suzuki, the parent Suzuki's plan, as you showed in your overall presentation, what's over there? You are going to double your revenue by 2030, as we understand you said. What are overall plans by 2030?
So within the global Suzuki, plan, the Maruti Suzuki in India had a very big part of our global plan. First of all, the Indian market will grow from the current market size of about 4 million cars to at least 6 or 7 million cars by 2030. So only in domestic market we have to prepare for this big growth. And on top of that, our export numbers also jumping up. So we have been, exporting cars from India about 1 lakh. But year before last and last year, we export more than 2.5 lakh vehicles from India. Actually, last year more than 2.6 lakh. So this will also, much bigger, like 2 times or 3 times bigger in the years to come. So we have to prepare for the growth both in Indian market and also.
Welcome back. Well, a lot of action in the market at this point of time. See the spike in the last 5 to 6 minutes itself as far as Nifty goes, because there was a sharp dip and there's been an equally sharp reversal as well. And most of the action is actually in the auto space right now. And what all is happening? You have Eicher Motors, which was down 6% yesterday. That was due to the fact that Hero and Harley had come out with a new bike. Today as well, it's taken a knock of around 3%, and that's after Bajaj has come out with its new launch along with Triumph. The introductory price for the first 10,000 bikes is around 2.33 lakhs, which is quite attractive at this point of time. So that's why Bajaj Auto has spiked 6%. But you have Eicher Motors, which is coming under pressure. Let's pull up Hero MotoCorp as well, because they just launched their bike yesterday and the street was penciling quite a bit of hope around that. That too is holding up with a gain of around 4%. And in the words of Rajiv Bajaj, Eicher Motors is the bank, and companies like Hero and Bajaj are looking to rob that bank. And apart from all of this, you just heard from the management of Maruti that stock too is flying away in the trading session, along with that entire spike coming in, and that stock hit the mark of 10,000 rupees. Yes, it's cooled off from there. Right now it's around 9,980, but it's been quite a journey for Maruti to hit that mark. It's tried multiple times to go to that level and has retraced a bit from there. In fact, let's go across to Shrishti to understand this entire journey that Maruti has taken to reclaim the 10,000 mark. Shrishti.
Well, yes, it's been quite a time now that we have seen that 10,000 mark on Maruti Suzuki, and today it is coming at a day where the company has actually entered a very new category for themselves. Above 20 lakh segment of car is what the company entered into. They have launched Invictor today with a price band of 24 to 28 lakhs, and definitely a day to cheer about, because after December 2017 we are seeing that mark on Maruti Suzuki, and between this period the company and the stock price did attempt 4 to 5 times to cross that 10,000 mark, but every time it used to miss it around by 2 to 3 odd%. But today onto the cash segment we have seen that mark crossing, so definitely good news for all the Maruti Suzuki shareholders. But let's understand and let's quickly take you through all the factors that are placed. So firstly, onto the top is the new launch, because what the company launches, it has a very important stats behind it, because what Elara is highlighting that the model launch success rate for Maruti Suzuki is actually 70%, much higher than for any other competitor, which is anywhere between 14 to 15%. So any new launch by Maruti Suzuki is keenly watched, and the success ratio is also very high. So that's on to the latest. But other than that, what the company always used to highlight, and especially in the recent interview as well, they highlighted that they have an order book of 355,000 of units. That's 3.6 lakhs. That's quite healthy. The demand continues from the urban as well as the rural market. The CNG penetration is about 20%. The demand persists over there as well. And also the company is working on their capex plan. FY24 capex has been pegged at 8,000 crores, which is now been upped what the was earlier. And in addition to that, the ongoing greenfield capacity of Haryana, the board recently given in principle approval for adding 1 million per annum of capacity. That's a bit in works now, but what the company is citing for is a very strong demand, and maybe all these factors are definitely at play. 10,005 is what you are seeing on the screen right now. Okay. We leave it at that, Shrishti. Lot of excitement. In fact, the only newsmaker other than banks is the auto pack today. Maruti share price crossing 10,000 shares for the 10,000 rupee per share for the first time since 2017 after a long haul. And even Bajaj Auto, with that spike that the stock is seeing right now to the tune of about 5.5%, I assume that the market cap has gained almost about 7,000 crore rupees in a single day's move. Eicher, of course, has been a different story altogether, has seen quite the fall in the last two trading sessions. Almost 9,000 crore rupees is what it's lost in terms of market cap. And no, you're not seeing any meaningful recovery play out in Eicher, even though the clarification coming in from Bajaj Auto that it's only an introductory price for the first 10,000 units sold that they talked about. Dipan Mehta on the show. Dipan, cars, bikes, it's a problem of plenty out there. What are we first talking about?
Yeah, good afternoon, and thank you for having me on your show. And this is the reason why we are very positive on the auto industry. I think last 4 or 5 years, every auto company has realized that new model introductions is the way to grow the sales and expand the market. And that is what they are doing. They are trying to move the consumer up the premium ladder. And all the launches that you have seen today are at the premium end. So what that does is that although volumes remain in that high or low mid-single digit, the average realization per vehicle tends to move up at least 10-12%. That's what we have seen for last several quarters or so. And that's how they're able to maintain the profitability going and improve the return on assets, because the higher priced products certainly have a higher profit margin as well once they reach a certain scale. I think this trend is going to continue for a few more quarters, and we remain very positive on the entire auto space, including Eicher Motors, which is right now under pressure last couple of days or so. But I think it's a temporary phenomena, and of course, Maruti has been going from strength to strength.
What do you do right now as an investor? Do you buy into this fall in Eicher?
See, I think that it's a great opportunity. Usual disclosure, we and our clients are invested. And I think that around these levels also, Eicher Motors is a decent proposition. It's not going to be like a multi-bagger it has been in the past, but I expect it to outperform the index, at least in the near future, in the medium term as well. And there's a lot of fear around the two launches which have been taking place from Hero MotoCorp and Bajaj Auto. But end of the day, I think that although the market share may reduce for Eicher Motors, the absolute numbers will continue to increase. And if you see of all the auto companies, they have had the best production and sales figure for the month of June. They also have a huge export opportunity, and the kind of brand, distribution, accessory sales, even the slate of new models they have, it's not going to be easy tiding for Bajaj or Hero MotoCorp to get significant market share. And also the numbers which they are talking about are very small. And also they are focused on the above 350cc bikes. And the majority of the sales, I'm not sure, I think 60-70% of the sales for Eicher Motor comes from the sub 350, means that around 200cc to 350cc levels or so. And still over there, the competition is quite limited.
Okay, so that's the take coming in as far as the auto sector is concerned. But a lot else is also happening while we are continuously talking about that, because that's the most interesting space. In fact, let's go across to Sharad to understand what the dealing room chatter is like. Is it about the auto stocks, Sharad, or is there some defense names which are coming up?
Well, yes, in focus we are having Bharat Electronics, and what we are hearing from the street is that the company has been added by Ask PMS in one of their India Select strategies. Apart from this, the key DI investors already invested in the stock include bigger names such as DSP Mutual Fund, Canara Robeco Mutual Fund, Kotak Mutual Fund as well. Now, important rationale coming in is that the company is having a debt-free balance sheet with a cash balance of roughly 3,800 crore rupees, and also there is a mobilization of advance orders of roughly 12 to 15% of the order size. Now, a sizable orders coming in, especially from the naval side, because of destroyers and frigates coming from GRSC as well as Mazgaon Dock. And also one more point is important, which is that 30% of the value of these new orders are actually coming from electronic systems, and currently BEL is the only sole supplier of it. And of course the order book size, that is more than 60,000 crore rupees at current levels, and the company has actually given sales guidance for FY24 as well. They're expecting a 15 to 17% top line growth with the operation margins coming between the range. But do remember the stock has been on a strong rally and it's up almost 37% from the January lows itself. And because of a strong run up in the stock, the 12-month target price is roughly almost, you could say, 6% return potential coming in with a target price of 130 rupees per share. And this is as per the Bloomberg.
Right, okay, we'll leave it at that. Thanks, Sharath, for joining in with those details. HDFC Bank, let's bring up that stock price as well for you. By the way, the Nifty is back at 19,400, and this is without any support coming in from Bajaj Finance or the HDFC twins. Eicher continues to sulk. TCS has been flat. L&T, SBI have all been flat. Where's Reliance though? Has that really picked up the index? Reliance intraday graph will just come up for you on your screens. Even Reliance hasn't. So yeah, that shows you the underlying strength in the market. It's doing it all the way without support from these key heavies, although Reliance is trying to recover somewhat, but not really participating in today's move. Deepan, the big concern for HDFC, the combined entity, is that, you know, the loan growth for the quarterly update, as they indicated, has come in at a 26-quarter low. For the behemoth that it's going to be in its combined avatar, do you think today's crack, or if it continues tomorrow, is a good opportunity to buy or add to positions on HDFC Bank?
I think largely everybody's already invested in HDFC Bank. And it's amongst the top holdings in most portfolios for retail investors that I know of, as well as a lot of the institutional investors. But if you still don't have HDFC in your core holding, this is a great time to buy into it. I remain firmly convinced on the long-term story of the merged entity. And the fact that the management is saying that they will create an HDFC Bank every 4 years, which means they're targeting 18% type of growth rates, which should translate into 18% type of earnings per share increase as well. And I think HDFC Bank is trading at reasonable valuations. So that's the kind of return you can expect, that the stock will return at least maybe 18% in line with what the growth of the bank is. So from that point of view, very positive. And, you know, these are minor fluctuations which do take place within the stock price. I know that the kind of growth rates are a bit disappointing, but maybe these things can change very quickly in a quarter or two. So very positive on the merged entity, and look forward to a nice strong bank being listed, or rather once the combined entity gets traded, which should provide a lot of capital to the country in terms of retail as well as wholesale loans.
This excitement around the much anticipated and delayed, if you will, Jio Bharat phone launch fizzled out quite quickly. I mean, barring yesterday when you did have Reliance hold out, you haven't seen any meaningful follow through, and the stock is continuing to struggle, you know, sub that 2600 price level.
Yeah, I think it was never going to be a big profit contributor, this particular launch. That was my assessment. But nonetheless, I think, you know, it does help continue the momentum as far as new subscriber growth is concerned. But the key question in Reliance just now, which every investor is asking, is what about the demerger, or if at all IPO of the various divisions? I think right now when we are buying Reliance, we're getting into oil to chemicals, we're getting into retail, and we're getting some telecom as well. It's all three businesses rolled into one. But everybody may not want to be invested in each of these three businesses. For example, I may find retail to be the most exciting portion, but there's no way I can buy it on a standalone basis. So that's the big question mark in Reliance, is that are they going to demerge the company, which is going to be extremely value accretive to minority shareholders? Or are they going to do just IPOs, in which case Reliance Industries becomes a holding company, and then the holding company discount starts to creep in? So I think this is a big uncertainty around the stock, and it's about time the management had a answer for it. Going by what they did with Jio Finance, we are hopeful that they will demerge the entities and offer free shares of the other two companies, that's the retail as well as the Jio platforms, to its minority shareholders, and that be very positive. And that could lead to a quick turnaround in this mild underperformance which we have been seeing in Reliance Industries.
It's Important to note that we are actually the outperformers amidst the global markets today, because if you take a look at how Asia shut shop, it was pretty much a sea of red all across. Shanghai, in fact, down 6/10. Hong Kong lost about almost 300 points. Korea, Japan, they were all in the red, mildly though. And even Europe, as I see on my screens, has started off on a back foot. So it's about 100 points gone for DAX, 0.6% cut coming in across the board for Stock 600, CAC, as well as the FTSE 2. So we clearly seem to be the global outperformers. Let's see what the US equity markets do after a day's break. That would be interesting to track. Right now, in the pre-market rates, there's S&P, NASDAQ, both down about almost 0.5% to 0.6% apiece. But let's get into BTST trades as well before we begin winding up for the day. Kunal, what's on your list?
So GSFC is the first stock. Many fertilizer names are trying to pick up pace. GSFC has managed to break past about 164 levels today, suggesting a buy with a target of 186, top loss at 160. And Maruti was apparently the next stock which I would suggest is a buy. My earlier targets were 10,000 for the stock, now revising the levels to 10,200 for a fresh BTST trade. The stop loss could be trailed to 9,750.
Okay, revising that upwards, but let's see whether Maruti hits that 10,000 mark on a closing basis or not, because in December 2017, it had hit that 10,000 mark on an intraday basis, not on a closing basis. So that's something we are tracking. But the market overall is seeing quite a bit of momentum at this point of time. In the last 2 minutes, there has been a spike. So given that context, Naresh, what are your ideas? I'm guessing it's more BTST and not STBT.
So yeah, it's BTST. First is a buy on Hindustan Unilever, breakout into new 52-week highs. Last 8 to 9 months range broken out, a defensive stock which could make aggressive moves. Stop loss at 2720, target price of 2800 plus. Second is a buy on RBL Bank, which has hit a new 52-week high as well. Stop loss at 187, target of 195.
Okay, so those are the top trades that our chartists are recommending at this point of time. But quickly, let's take it across to Dipan and try and get his view as far as the entire FMCG pack is concerned. Godrej Consumers came out with a very good set of update, Dipan. What's been your expectation from the sector? And in terms of the stock specific, ITC has been the clear leader, but do you now expect the likes of HUL, etc. to also bounce back?
See, I think our view on FMCG has been neutral to negative, and so far it's not played out that way because FMCG index is trading at all-time high. I think HUL also has given decent returns for the past few weeks or so. But we think that there are better ways to play the consumption investment theme in India, and maybe it's through retail, through hospitality, travel, tourism. There are many other avenues now in FMCG. I think a lot of categories over there have become quite mature, and we are expecting that there can hardly be any further scope for PE re-rating within the sector. So that kind of supports our thesis that one should be neutral to slightly negative on FMCG. But having said that, we have to admit that at this point of time, FMCG stocks are doing well. And maybe some smart money is buying into safety at a time when stock markets are moving up, trying to book profits for the more risky sectors. But on the medium to long-term basis, we are not sure FMCG will continue to outperform as it has just now. And call it base effect, call it the fact that volume growth will be low single digit. There are not many levers to improve the growth rates.
Right. Okay, BHEL, look at the spot on that counter, holding up about almost 7% as we speak right now. Motherson, of course, holding out just very smartly, almost a 7% gain there too. Divi is holding up 5.5%. There's Colgate up about 5% or so. And Bajaj Auto has zoomed past. Now a 6% gain is what you're seeing on Bajaj Auto. That stock is holding up very, very smartly indeed. Astral, HDFC Bank, Dixon, Canfin Homes, these are the disappointing ones. Canfin down by 3.6%, similar as the price action on Dixon. HDFC Bank down about 3% cut coming in for HDFC as well. And Astral down about 2.5% as we speak right now. In terms of pressure points on the Nifty, it's, the HDFC twins for sure. There's also Bajaj Finance, which hasn't seen much of a follow through since yesterday. That's, languishing by about 0.4% or so. Reliance, like I said, lifted off from the intraday highs, intraday lows, I beg your pardon, but not a meaningful move. 0.2%. Soft is where that is. And then technology continues to be, pretty flat. So Infi, TCS, SBI, along with that, is not really doing a whole lot. Marginal pickup at best for an SBI, or for that matter, even for a TCS or L&T, but nothing meaningful, so to speak. Today, of course, the stars have really been the auto names. Hero MotoCorp, Bajaj Auto, Maruti, that trio has really done it for the market. Also, Hindustan Bank, after their quarterly update, which was quite impressive and ahead of what the street was anticipating, that stock as well has managed to hold out pretty good. Kunal, just wanted to understand, you did talk about as to how some of the indicators on the Nifty are looking a little bit overbought. How steep could the correction be, if at all it is a correction, or is it going to be a much of a sideways kind of move? We'll just consolidate in a narrow band.
Yeah, I think we should consolidate. I don't expect a major correction, but at least, what happens is when you see such kind of a ferocious up move, 4 or 5 days, we've climbed up, some 800 points, 700, 800 points on the Nifty. There's bound to be some, speed breakers which come along the way. Now, I don't expect a major reversal on the index trends on the downside, at least over the very near term, but at least a pause. And I think the last 2 days, specifically yesterday and today, what we are seeing is more of a range-bound movement for the indices. That I believe could probably carry forward for the next couple of trading sessions. So, that's the best which you can look for, even in this kind of a roaring uptrend for the indices. Even if you get a 200 point, 250 point range on the index, that would still become termed as a healthy consolidation.
Okay, a healthy consolidation. That's what we are tracking as far as the market is concerned at this point of time. But at least 19,400 is being held. Yes, Sensex is also going home around that 65,500 mark. Impressive advance decline ratio. But stock-specific action was clearly in autos. Eicher, Maruti, Hero MotoCorp, Bajaj Auto, these were your top movers. Even IT made a bit of a comeback today. So whether it was Infosys, Tech Mahindra, these were the stocks which were trading higher. There was also this entire energy pack, MRPL, Chennai Petro, which was in focus. So a lot of stocks that really kept the markets excited. Not to forget the news flow around Motherson Sumi, Strides Pharma. Really, a lot of buzzers in the broader market. But with that, we are wrapping up this edition of Closing Trades. Thank you so much for tuning in.